Hey, good morning, Forex traders and Price Action Traders Institute members and followers. It's Monday, January 30th. It's been a while since I've made a video on a trading tip, so I thought it was time to put one out there since we had such great moves both in the London session and during the New York session, which of course is what I focus on and what the bulk of the Price Action Traders Institute members focus on. So you can see it's 15 minutes before 11 a.m. here on the West Coast. And let's go ahead and take a look at, I want to specifically take a look at the pound yen this morning. All right, so here's a actual screenshot, not a screenshot, but an actual look at the pound yen. And looking at our analysis overnight, you can see that there was a nice clear directional move overnight that had set up to the downside. And London session traders had a great run. Here's where New York session traders came on deck, right around in this time. Maybe some of you came in earlier and actually got this yellow line trade right here. I wasn't up yet, but what I did get on was this momentum. And we teach traders in the Price Action Traders Institute how to trade these momentum candles when there's no yellow line pullback. And typically that happens when the market is taking off in a certain pair. We want to get positioned. It's not going to come back for a pullback, so we want to get into the run. And you can see the nice trajectory down that this pair took. Now I want to go and show you my actual entries on this. So this isn't theory. This is actually what I traded. So let me get those screenshots up. All right, so you're looking at the actual trade that I took. So again, remember, we had this clear directional move to the downside that was set up overnight in the London session, and we had momentum here. And I entered on a suckback right here. You can see the green line. I entered short. And what you're looking at is the trade actually moved very, very quickly on this candle. So I pulled down my stop. My original stop was up here at 12 pips. I use a 12 pip stop on the GJ, somewhere around in here. All right, so that trade ended up getting into profit very quickly. So I wanted to lock in 25 pips. It was much more than 25. And I was targeting down here at one of our levels, one of our key price levels. So let's go ahead and take a look at the next screenshot. So now the trade is continuing to keep moving down, and we saw continued price action in the yens across the board, a lot of strength. And I've now moved my target down another 25 pips to lock in 50 pips in total at this point on the trade. I didn't want to give back too many pips, but I still wanted to try to press this trade to come down into my target down below at the level. Let's take a look at the next screenshot. So here you can see that now the trade is on approach to that level. Here's the limit zone right in here, and this is where I want to get out of this trade. So when everything was said and done, this trade did hit the limit, and it actually dropped about 50 pips deeper, but I came out of this trade with plus 86. Now, do we have these big trades every time? No, but when there's momentum in the market, and you're a more experienced trader, you can press these trades or trade in between levels and book profits at those levels. But the most important thing to do is always to, one, keep a tight stop, two, move that stop if you're someone who's a little more advanced and can press trades, if you're able to see the price action across the board. And then three, have a realistic target. So even though we all are shooting for levels on these trades, we all have realistic expectations as to our experience level, and we know the price levels that we want to get out of these trades at. So I hope that helps you. Again, this was a clear directional move short that was set up in London overnight. New York session traders were able to jump on it and actually maximize the trade. Okay, that's it from Kim Krompass from the Price Action Traders Institute. Thanks for listening.